Hey, it's Steve Zelnardo here with Remax West Zelnardo Associates and Trevisa Realty. Yesterday, the Federal Reserve Chair Jerome Powell announced another rate increase. So let's have a listen to his press conference.
Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
No shit.
Our decision.
It is what it is. So they raised the overnight lending rate another 3/4 of a basis point. Obviously, their target is 2%. If you have a look at, or their target is 2% inflation. You have a look at the, it doesn't look too promising when you're still in the 8%. And actually, they haven't reported in October just yet. But look at this. I mean, from March to September, we've been over 8% here in the U.S. And I'm not sure when they're going to release this and what the numbers are going to look like. Hopefully it's under 8%, they're in the right direction. But if their target is to be at 2%, like this is going to take years to get down to that range unless the market just literally stops. And so that was their fourth straight increase hike, naturally. What that's done, I don't know, not much just yet. Obviously, we've seen a correction here. We're seeing prices kind of stabilize or getting down, but there's still it's a different market here, specifically in Florida, where people are coming in from other states and they're buying cash and they're starting to move deals in. And obviously there was a Hurricane Ian that put pressure on more inventory out here. So we see slight correction in pricing, but nothing crazy. We're like back home in Toronto. So again, the only tool they have is to keep increasing interest rates in order to kind of curb this inflation. I don't know how long that's going to take. I think a lot longer than they thought, that's for sure. So their policy rate currently right now is at between 3.75% and 4%. 3.75 obviously on the low end. This was a good opportunity to buy. I know a lot of Canadians back home looking to exchange money to kind of hedge the market and buy some properties out here. This was a great opportunity here. By the time I was following this at night, the market closed. And there was some trading at night that brought this dollar down to 135. And then by the time the morning opened, I called my broker to buy cash or buy some USD. It just took off. So we couldn't get it at let's say at that 135 range. Ideally, it would be here is beautiful. September 12th, it was under 130, but ultimately we'll see what happens. This should hopefully fluctuate and get into a lower range. Nobody really knows. We're in uncharted territory, but timing and patience is always going to be the winner in a game like this. We know that the Federal Reserve has one more meeting for the year, and that's in the middle of December, rather, over here. And then obviously they start into the new year. So let's see what happens. Naturally, we're going to keep you in tune. Very important to understand both markets, obviously, not only because we're trading in the U.S. now, real estate, but also for back home. We'd like to follow what the U.S. is doing with their situation because we are so tied together. I wouldn't say tied together fully as an economy, but we do follow, America's lead. So let's see what happens. I mean, we've gone a lot more interest rate hikes over the period. Let's say we had more rate changes, but ultimately the America right now is at a higher rate for their 30-year amortization. So we'll keep you guys in tune with that as we go. Have a great day, guys. Ciao.